prices are now just fractionally lower than they were 1 year ago, according to Parcel Labs, which looks at high-frequency listing data on single-family homes, condos, and townhomes, both new and existing. And home prices are down 1.4% in just the last 3 months. Okay, so why is this important? Because we have not seen home prices nationally go negative since mid-2023, about a year after the Federal Reserve first brought rates up from zero and mortgage rates moved sharply higher. But even then, prices were negative really super briefly, just a few months on that annual basis. Before that, prices hadn't gone negative since the great financial crisis, when they basically crashed and didn't recover for about 4 years. Now, I'm not gonna lie, I find reporting home prices is one of the most frustrating things I do on this beat, because so many different sources measure them in different ways. Some do a median price, which can be heavily skewed by what types of homes are selling most. Some do an average, which is the absolute worst. Some do a repeat sales index of similar properties, which is considered the best measure, but that always seems to take a few months to report, so the data is old once you get it. It's also always important to measure prices compared with the same time a year ago. Month to month just doesn't work because housing is very seasonal. Families buy bigger, more expensive homes in the spring and summer, so they don't have to move during school. Fall and winter tend to be just the opposite. Now, this new set from Parcel uses a much more high-tech method, which is way too complicated to get into here, but suffice it to say, it seems like the most current and accurate measure. You're probably saying, well, a home is only worth what someone's willing to pay for it, and that is very true. So there will always be outliers, and all real estate is, of course, local. But there are trends, and those are very important.
Hey guys, welcome back to the channel. Robert here. I agree with a lot of what she's saying. Just to boil it down, the biggest takeaway for me is this. There is more inventory in a lot of markets, and all real estate markets are local. And because of that, you really need to hone in on where it is that you're going to buy. And here are 3 things that I think you can look at as a potential buyer, be it first time, move up, downsize, regardless of why you're buying. But 3 things that you can look at to make sure you are getting the best deal that you possibly can. So inventory. What is the inventory in your local market? And if inventories are increasing, that should be a win-win for you if you're buying. Interest rates would be number 2. And regardless of what you hear online, again, you need to look at the time that you're ready to buy and you're serious, meaning you've applicated and you're working with a lender, to get a real good feel on what interest rates are, because most of the information that you see and hear online is coming from a national perspective, and we all don't use the same lender, and all lenders have different rates, fees, so on and so forth. The narrative that rates are over 6%, that's from a national view. I can tell you personally, my rates are still in the 5% range. So that's the second thing you need to look at. And then the third thing that you should keep in mind is this: being realistic. When you are buying a home or buying anything, you're greedy. That's including me. When you're selling it, you're greedy. This is where choosing the right professional will help you look at things logically, and hopefully that professional could give you a historical look. I like what she said, a year-over-year look, so that you can actually see the decrease in some of these markets as far as home prices are concerned. But they are not the prices of 2019. That's unrealistic. That's being greedy. Just like sellers, when there were very limited amount of supplies in many markets, and they were benefiting from a lot of different tailwinds. That's the analogy. If you're flying a plane and the wind's blowing behind you, you burn less gas, right? You have tailwinds benefiting sellers. Well, we ain't in those times either. So these are the things that you have to look at in this coming housing season, starting April through September in most of the country. If you can focus on those 3 things, you should fare well in your pursuit to purchase your next home. Let's check it out.
There are over 500,000 more homes on the market than there are buyers willing to purchase them. 2026 is about to be an insane time to buy a house. Let me explain. Over the last couple of years, you've probably heard the word shortage a lot. Like, there have been national shortages of homes because there are sellers that had 2 and 3% interest rates that they were not willing to give up. So they weren't selling their homes. There were people literally bursting at the seams of their home because they bought them as a starter home and then they had kids and now they have multiple kids. And so we're finally 6 years away from 2020 and the crazy rates that we saw of those 2s and 3s. And so people are finally understanding like, okay, if I want the bigger space and the kids only grow more, then I'm going to have to give up this mortgage rate. Now, what's interesting is when you own a home, every year that you wait to sell, ideally and theoretically, the price of your home should increase because that's how natural appreciation works. But when you're a buyer, nothing's really going up in value. And if you have savings for a down payment in a checking account, inflation is actually eating away at it. So you're like losing money while waiting to buy a home. And finally, the last couple of months, there have been more buyers that are like, I'm kind of honestly sick of waiting for interest rates to get to 2 and 3%. Everyone's coming to terms that like, that's probably not going to happen again. And now there are more people entering back into the market. I have never pre-approved so many people in January that are going to be the springtime buyers. And the springtime is already a crazy time because as we approach summertime, more people who have families want to buy and sell and move into a house in the summer before the kids start back in school in the fall. And so it's going to get crazy because people are just becoming really impatient with their current status. So all those people who were waiting for rates to drop are like, screw it, I just need to get into a home because I'm literally losing money not buying a house. And the people who are like, I need to sell a house and move up because my family is not fitting in this house anymore, they're seeing that houses that are a step above theirs are just going up in value. Like I just had a family that went from a house they bought 4 years ago, it was $250,000, and they just bought a $425,000 house, and that only added one more bedroom. So people are starting to understand, like, if I don't make a move now, the market is just going to keep going up. It's not like we're in this bubble. Like, there's no reports that are showing that there's going to be a bubble pop like there was in 2008. So if you're a buyer, your pre-approval has to be on point. Like, I'm talking credit over 640, making sure you have reserves and money somewhere for negotiations. You have to make sure you don't quit your job. So if you're a W-2 employee, then keep your job. It's very important that you do that. Don't become self-employed after you've had a W-2 job. If you're self-employed, look at different programs. Don't just let the banks tell you that they can't approve you. But if you're self-employed, basically don't not get into this market because the bank doesn't know how to do a traditional loan for you. And if you're a seller, please make sure that we're listing with agents who know what they're doing, because the last thing you want to do as a seller is be one of those sellers that your house is sitting on the market still like 72 days after. Because what offers do you think you're going to get after month 3, 4, 5, 6? Ones that you're not going to be happy with. So make sure that you are picking an agent that is going to look at the market where you live, and they will suggest a game plan for where you should start to list your home. We're not working with part-time loan officers or agents anymore in 2026, okay? It's very important that we understand this.
Excellent take. I agree with everything that she is saying. I'm going to just hit on a couple of points or reiterate a couple of things, and we'll go backwards from her last one. It's professional time. No disrespect. And I know you need new blood in the business. What am I talking about? New loan officers, new realtors. You got to have them come in. But we're in a market now where this is for the live men. If you're new, you got to partner with somebody and learn what it is that you're doing, because there's families and things of that nature as far as their psyche is concerned, and a lot of money at stake. Keep that in mind when you're moving forward. If they're not full-time by now, all of the part-timers are gone. That environment is not here anymore. Sellers, you got to pick the right agent, because as she stated, after 70, 75 days on market, your house was priced the wrong way because your realtor probably was new and just wanted to get a listing and told you what you wanted to hear. And it's like I said, it's not good for anybody. To my buyers, I love what she's saying. Not only do we as professionals need to deal with somebody that's ready, but you got to be ready. You have to know your numbers. I too am pre-qualifying more folks in the first 2 months of this year than I have over the last couple of years in preparation for the buying season. And that's a couple of things going on. People psychologically have come to terms with all of these folks that's been online saying the sky is falling. they're learning that that's not true. They're doing that for whatever their reasons are. And life is happening. As we always teach here, there's a reason why you should buy a home. You're forming a new household. You got some diapers, babies. You need some more space. Maybe there was a death, downsizing. These are the reasons to buy. And folks are like, I can't wait anymore because the information that I've been getting is inaccurate. Moreover, very good point that she made, inflation. Not only are these assets, these homes, primary residences that may not be income producing, but where you live and grow your family and protect your family, they are tied to inflation. That's why the prices go up. That same inflation is eating away at all of our purchasing power if we have dollars. If you don't know what that means, just go to the store, whatever your favorite bag of chips or candy bar or water, whatever it is that you like to buy. Is it the same price today as it was in 2020? The answer is no. That's inflation. So you have to move because your purchasing power is eroding. And then a lot of folks, I'm finding, when they get ready to take a lick at the stick or get onto the housing ladder, it's like, man, this is all I'm getting for the cost. Yes. Why? Inflation. You have to move, but you have to be prepared. You have to know your numbers. More importantly, you have to have some money. You cannot own a home without having any money. That's dead going forward. That needs to be a new mantra, that you shouldn't even be thinking about home ownership if you don't have some type of reserves and a job that you feel confident in, and knowing that you're going to be there 5 years or more. If all those things check, here's the last two things, your credit. Come on, y'all. It's 2026. It's real simple. 2 to 3 trade lines. Most of you guys have a student loan installment, car loan installment, and 1 credit card revolving. If they've been open for 2 years, you got that under the bridge. Now it's about the payment history, on time, all the time, every time. With the credit card, it's about the utilization. Most people tell you 30%. Over here, we want you to be wealth generators, but I'm realistic. I know some of you guys are starting. So if you're at 30%, every time you could break a barrier, that 9, go from 30 to 29, it's going to improve the scores. The highest scores are people that utilize the revolving lines of credit at 10% or less. Okay? Try to stay away from the buy now, pay laters. Those are debt bombs and traps. I know they make it super convenient, but these are the things that could get you. And then lastly, for those of you that are self-employed, here's the deal, man. There's more than one way to get into a home, but this is where the rubber meets the road. You're either going to pay the IRA and the S, the taxes, or you're going to use the tax code that the IRA and the S developed for business owners to write off a lot of things, to not have a large taxable income, or in some cases none, but you can't have it both ways. So if you're going to write off everything and you're looking to purchase a home, you got to keep some of that money, man. Where's the money? And if you have those monies, we have 1099 programs now. We have bank statement programs now. We have debt service coverage ratio loan programs. All of these things require you to have a larger down payment. So your loan to value is going to be lower and the interest rate is going to be higher. If you want lower down payments and the lowest interest rates possible, you got to go the traditional route. We need the 2 years filed tax returns, going to base it off of the taxable income, so on and so forth. Don't want to bore you guys here, but you got to choose what you want to do. But the only reason it's a no is because your credit is not together or you don't have the income. Other than that, if you're dealing with a seasoned professional, there's ways to help you get onto the property ladder. If all of these things that you've heard on the video is just telling you, hey, it's time to move forward, I agree with you. What's the next step? You need to reach out to a lender that you know, like, and trust and get a proper approval. And guess what? I'm a lender. My NMLS license number is 180100, and I would love to have that conversation with you. My contact information is pinned in the top comment and in the description of this video. So my time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. Watch these next 2 videos. They'll help you with your education as you move towards the goal of home ownership. And for the rest of you guys, indeed, y'all stay blessed.